Hi, this is Indranil and you are watching Business Bites in our channel The Spotlight, India's first online business news channel. In today's Business Bites, first news we have Apollo Hospitals to demerge their omnichannel pharma and digital health business into new entity. Second news we have Torrent Pharmaceuticals to complete their acquisition of JB Chemicals and Pharmaceuticals in the next 15 to 18 months. Third news we have quick commerce companies adding extra range of levies to boost their earning per transactions. Fourth news we have Manipal Health Enterprises stands as the front runner to acquire Sahyadri Hospitals at $800 million. And fifth news we have Cloud kitchen operator Cure Foods filed their draft red herring prospectus to raise 800 crore through an IPO. In first news, Apollo Hospitals to demerge their omnichannel pharma and digital health business into new entity. India's largest listed healthcare chain Apollo Hospitals Enterprises and its subsidiary Apollo Health Company have decided to demerge their omnichannel pharma and digital health business, which is a 24/7 telehealth business, into a new entity that garner nearly $2 billion in annual revenues and is already a record for India's fragmented drug retailing industry, when the business will be separately listed later. The move by Dr. Pratap Reddy-led company will create India's largest omnichannel pharmacy platform and distribution business, as the plan of the composite scheme also provides a merger with KEMD, which is India's leading wholesale pharma distribution arm of the flagship company. The promoter family holding in the new company will be approximately 36.5%, and Apollo Hospitals proposes to unlock value through strategic reorganization, which will be enabling direct listing of its omnichannel pharmacy and digital health business. Later this year, Apollo Health Company made a deal with global private equity firm Advent International to raise equity capital of 2,475 crore with an aim to build a pan-India presence for the company. The composite scheme creates a formidable omnichannel pharmacy distribution and digital health platform leader in India with scale of 16,300 crore, that is around $1.9 billion of revenue in financial year 2025, with stated plans to achieve 25,000 crore revenue by financial year 2027 on an EBITDA or operating margin of about 7%, though the new entity will get automatically listed in about 18 to 21 months after regulatory approvals. In second news, Torrent Pharmaceuticals to complete their acquisition of JB Chemicals and Pharmaceuticals in the next 15 to 18 months. The acquisition will be mainly debt-funded, where the company will acquire 46.39% equity stake on a fully diluted basis of JB Pharma through a share purchase agreement for 11,917 crore at 1,600 per share, which will trigger a mandatory open offer to acquire up to 26% of JB Pharma shares from public shareholders at an open offer price of 1,639.18 per share. Torrent has also expressed its intent to acquire up to 2.80% of equity shares from employees of JB Pharma at transaction price, when JB Chemicals shareholders will get 51 equity shares of Torrent for every 100 equity shares of JB Chemicals. This acquisition is aligned to Torrent's strategic vision of deepening its presence in the Indian pharmaceutical market, which will additionally help the company to open a new avenue of growth in the CDMO segment, where JB Chemicals has a strong right to win with a successful track record in this space. International markets like US, Russia and South Africa will be of particular interest in the CDMO space, while in the India business, JB Chemicals' strong capability in areas like cardiac and gastroenterology will be complementary therapies to Torrent, and the deal also opens new therapy segments for Torrent in areas like ophthalmology, IVF as well as nephrology. In third news, quick commerce companies adding extra range of levies to boost their earning per transactions. Quick commerce companies have begun adding a range of fees, from platform and handling charges to convenience, small cart and rain levies to customer orders, in an attempt to rise up their unit economics or earnings from each transaction. A check across the top 5 quick commerce apps shows these charges, which come on top of the standard delivery fees and vary across cities and platforms, range between Rs 6 and Rs 30 per order. On its app, Zepto says it levies a handling charge towards handling of products in your orders at our stores, while rival Blinkit says this fee goes towards ensuring proper handling and high-quality quick deliveries. Zepto and Instamart, which also offer bulk orders at discounts. Both platforms charge a higher handling fee on large baskets. There is also a surge fee charge during high demand hours or when there is a shortage of delivery workforce and the order value is below certain thresholds. Eternal-owned Blinkit, Swiggy's Instamart and Zepto control 80 to 85% of India's quick commerce market, when these fees are not unusual in the consumer internet ecosystem, as companies in the segment including food delivery, online travel, movies and event ticketing and big e-commerce platforms such as Amazon and Flipkart also levy similar charges. For the quick commerce segment, most platforms have also raised the minimum order value to unlock free deliveries, which again suggests that platforms are pushing customers towards higher average order value purchases. This can be understood with the market leader Blinkit reported an operational loss of 178 crore for the January to March period, which is almost 5 times wider than the same quarter last year, when Swiggy Instamart's operating loss jumped nearly threefold to 840 crore in the same quarter. In fourth news, Manipal Health Enterprises stands as the frontrunner to acquire Sahyadri Hospitals at $800 million US. IPO-bound Manipal Health Enterprises is leading the race to acquire Sahyadri Hospitals with a 6,838 crore, that is around $800 million US bid, while the sources did not reveal the financial terms of the global investment firm's offer. The strong interest in the Pune headquartered hospital chain owned by Canada's pension fund Ontario Teachers Pension Plan is symptomatic of the high-intensity consolidation ongoing in India's hospital space. Ontario Teachers Pension Plan acquired Sahyadri from Everstone Capital in August 2022 at a valuation of around 2,500 crore, when Everstone had bought the hospital chain 3 years earlier in 2019 from its founders neurosurgeon Charudat Apte for about 1,000 crore. Sahyadri Hospitals operates 11 facilities across Pune, Nasik, Ahilyanagar and Karad, comprising 1,300 beds, 2,500 clinicians and 3,500 support staff, and Sahyadri Hospitals is estimated to have posted 210 crore in earning before interest, tax, depreciation and amortization on revenue of 1,200 crore in financial year 2025. For Manipal Health, commonly known as Manipal Hospitals, the deal could provide a much-needed strategic foothold in Western India, where it currently lacks a significant presence. When in June 2025, KKR invested $600 million US in debt into the Manipal Group to support its accelerated expansion and corporate growth plans. The IPO-bound Manipal Hospitals is the second largest hospital chain in India, has been on an aggressive acquisition spree. In 2023, it acquired an 84% stake in Kolkata-based AMRI Hospital in a deal value of 2,400 crore. 2 years earlier, it bought Columbia Asia's Indian operations for 2,100 crore. And in fifth news, cloud kitchen operator Cure Foods filed their draft red herring prospectus to raise 100 crore through an IPO. The Bangalore-based company Cure Foods runs over 500 kitchens in 70 cities with brands like EatFit, Nomad Pizza, Sharif Bhai Biryani, Cake Zone and Frozen Bottle. It recently acquired pan-India rights for donut and coffee brand Krispy Kreme. Of the total fresh capital being raised, the company will be utilizing 152 crore towards new cloud kitchens, restaurant, kiosk and central kitchens, when the bulk of this amount will be deployed towards the Krispy Kreme brand, while about another 127 crore will be used to repay certain debt, while a part of this remainder will be invested in various subsidiaries to increase its shareholding. In March 2024, Cure Foods had raised $25 million US from 3 state ventures as a part of a larger round that valued the company at $375 million US, which is around 3,100 to 3,200 crore. The company has joined a long list of new age companies that have filed to go public. These include Grow, Pine Labs, Physicswala, Ship Rocket, Urban Company, Boat, Capillary Technologies and Wakefit. So these were the top 5 business newses from Business Bytes in our channel The Spotlight, India's first online business news channel. I would like to request you to please subscribe this channel so that you can have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.